Happy New Year to everybody. I believe this is going to be the best year by far, and I also believe it's going to be one of the most profitable years by far for everybody. So, guys, as I always say, if you're coming to your charts, you don't know exactly what you're looking for, that is simply gambling. You need to know what you are looking for way before you even open your charts. So, guys, without any further ado, let's jump into it. Today, I want us to look at the trend following kind of strategy, okay? We are following the trend, and this works for currencies, cryptos, and metals, okay? I know that most of you are actually uncomfortable with indices, more especially those from USA, because I've been receiving a lot of emails, and now this one works for this currencies, crypto, and metals, okay? And it's also one of the easiest ones, okay? And guys, we follow steps, okay? And each of these steps has to be fully met before we execute. So as you can see here, step number one, we need a direction. Obviously this makes sense because now we are following a trend. To follow a trend, we need to have a direction, okay? So yes, of course, that's rule one, we need a direction. And let me just explain this using the drawing that I've drawn here. I believe you see this, right? Okay guys, let's say we had a day that actually went down here, okay? And when you look at this day, one thing you're going to realize is that we have a high denoted in blue line, and we have a low denoted in blue line, and we have the closing price denoted with this black line over here, okay? And this actually resembles what's on my charts, okay? It resembles what's exactly on my chart, because if you look over here, I have the high, I have the low, and I have the closing price. Just like this is the highest price reached, it's going to be denoted by lines. This is the lowest price reached, it's going to be denoted by this lines on the next day, and this is where the price is closed, it's going to be denoted by this red lines here. And these are just free indicators, they are in my description, okay? So that's exactly what I'm showing you here with these levels. They are important, okay? Just keep that in mind. And then let's say we had a day that opened here and went down. Maybe it was from a downtrend, okay? That's why I'm not saying this is the direction, because this is usually from a downtrend. And then let's say they give us a day like this. You can see this day just didn't go anywhere, it was just inside. And then the following day, that's when we had an aggressive move, okay? Because guys, one thing you have to know is that we have two types of strategies. In every strategy in the world, okay, all the strategies in the world actually are going to be covered in these two strategies, okay? It's a momentum strategy and a strategy that is non-momentum. And when we talk about momentum strategy, we're actually talking about something, maybe they consolidate, and then they break out heavily, okay? And when we're talking about non-momentum, this is something that is consolidating, okay? So if you have been following this channel for a while now, I believe you understand that I don't really love the non-momentum kind of strategy. I love a strategy that explodes, okay? I'm looking for momentum, I'm looking for big moves, okay? Because this one, yes, you already know non-momentum strategies also have strategies under them where you can like sell, buy, something like that. But I need something that is really based on momentum, okay? Something that is exploding, okay? So with that out of the way, I believe, okay, you will understand this. So this one is based on momentum. We need aggressive moves, okay? So the first thing is we need a direction. So if you look at this day over here, we had a very big move, okay? This is our direction, okay? So yes, that's under rule number one. And then we are going to go to rule number two. Rule number two says the previous day's high or low must be violated. In other words, the previous day's high or low must be broken. And when you look here, I told you this is the high, this is the low, and this is the closing price. The blue lines are actually the high and the low, okay? And then the black one here is the closing price, just as I showed you on the charts. So when we look at this day here, okay, when we look at this day here, it has violated this area over here. In other words, yes, it has pierced through the high of the previous day, because this is the high of this day here, okay? Because these lines actually denote different kind of days, just as it's shown on my chart, because you can see these are different days, okay? And you'll see that when you go to the hourly time frame, that's the one that will show you the day separations, okay? So guys, I believe you understand up to this point here. So now we go to point number three, okay? Point number three says we need now a pullback to important levels. Hence why I told you I'm drawing these levels, okay? Because they are important levels for us. And one thing I also want you to understand is that we are going to be executing on this day over here, okay? A day that comes after a huge rally, okay? It could be a drop or a rally, it depends, as long as we have directions, okay? Okay, so this is the day we will be executing on. So we analyze this day over here, and preferably analyze in the evening around 8 o'clock when the markets are going to close, because you'll have the high, you'll have the low, and you'll know if there is a direction or not. Okay, so go through all your assets. You can go through all the currencies you look at, the cryptos or the metals, and look for days which had huge rallies. Okay, that's what you are gonna analyze. Okay, and choose the best one. Okay, so when I talk about the previous day here, I'm actually referring to the day which is here, because we are analyzing this day. So when we talk about the previous day, we are talking about this day over here. Why? Because the opportunity is actually on the next day. Okay, so we analyze this day for the following day. Why? Because we want to be following the trend. So this tells you that we need a pullback to an important level. So in this case here, what we need, sorry, let me just move this to this side over here for a minute. Okay, what we need now is a pullback, okay, to an important level. It's step number 3. Okay, so this tells you that we need a pullback to an important level. So guys, when we talk about an important level, you see this high, it's off this day here, but again, it can come and act on this day as a crucial level. It can come and act as a crucial level, okay, because prices can come and bounce on this one. Okay, they can come and bounce on this one. Okay, because this is what gives us an opportunity. In other words, if we don't have this pullback to an important level, then we don't have anything to execute. Okay, we must be patient and wait for this one, because our opportunity is actually this, from here all the way back to here, and some days it will actually come and close here. Hence I always say divide your lot size in half and take your profit when it hits the high of the previous day. Okay, and you can hold, because most of the day they will close up, but this is the opportunity we are looking for. Okay, so we are not just looking for anything, we know exactly what we are looking for. We are looking for a direction, a very aggressive day. It depends, it could be up or down. Okay, the direction doesn't matter, as long as we have a direction which we can establish as a trend, and then the following day we can follow it. Okay, that's the most important part. And then this again, that dropping is very important, okay, which is a pullback. Okay, I'll show you this when we go to the charts. And then lastly, we need a pattern on a 5 or a 1 minute time frame, or we need a W with a retest. And this is very important, guys. Okay, this is very important. So here, when it bounces on this key level, you will most likely find a pattern here on a 5 minute or a 1 minute time frame. It can be a head and shoulder, it can be a rectangle, it can be a triangle, whatever pattern, or else you get a W. But if it's a W, you must get a retest. I'll show you this when we go to the charts. Okay, so I hope you understand this. And guys, there's a variation. Not every day will play out like this. Okay, some other days will do something like this. Okay, let's just delete this and this. Okay, and delete this over here. Okay, let's say other days will do something like this. They will come, yes, still violate. Okay, however, they will come down and close here. Okay, this is still a pullback. Okay, this is still a pullback because this is the high. So on the following day, they might just come to a crucial level, and I'll explain more about the levels when we go to the charts in a moment. Okay, so this can happen, and again, our opportunity is still the same. Okay, we need this move back to the top, and then first TP will be somewhere here. Okay, so you must understand that sometimes they will pull back on this day. Okay, some days they will pull back the next day. Okay, but the most important thing is there is a pullback and there is a high that we are actually referencing. If we're executing, we want to take it to that high or even beyond. Okay, and another scenario is whereby, just allow me to go through this. Okay, another scenario is an instance whereby they will do something like this. Yes, again, and then, oh sorry guys, it has to be red. Okay, they will just do something, prices will go and go depending on where they close. Okay, and then the next day they can just do like this and come and end up playing here. Okay, so when things like this happen, you need to know that, okay, now we'll have an extra day. Okay, now we'll have an extra day, because in this case here, the opportunity will be the next day. Okay, most likely. Remember, again, this changes nothing. Okay, why? Because our high is still the same here. Okay, this is still our high. Okay, this is still our high. So our opportunity can come on the following day. Like for instance, they can just start doing something like this. Okay, they can start going up, and this is our opportunity. Okay, but you must also know that on this day now, there's another possibility. Now if they do something like this and they come and break this low here, okay, this changes everything. You have to know or pay attention to the breakout here. If it's a stop hunt, just enough to stop hunt these guys here and then reverse, the opportunity is still valid, okay? Our opportunity is still valid in that case. But if they start doing like this, now it's an aggressive move down and they come and they retest here and now they are moving like this. This tells you that there is a change in direction. So this setup is invalidated, okay? So I believe you understand that, okay? I believe you understand that. And let me just explain something quite important before we go to the charts, okay? So some days I told you that, okay, I just told you that we will be looking for a pattern or a W. So guys, if you see something like a W like this, okay, most likely market structure plays a role here. This is the break in structure, and then when the retest comes, usually the retest will give us break of structure now. So this is now making higher highs. That's why you can take the opportunity back to the high. And it's in understanding that when they break here, it's just a break in structure. If you don't understand market structure, please go and search for market structure. Okay, that's where you will actually start understanding these things. And when they break here the second time, it's BOS, it's break off structure. Okay, so that is one of the most important things. So now guys, we'll be going to the charts, and for those who need like something in the form of a PDF, I have a PDF. I have two PDFs here. These are two strategies for currencies. This is one for indices, and under it we have different kind of strategy in the form of trends, because sometimes they give you this kind of a trend and it's executed on its own basis or on its own rules. Okay, so here you have more than 4 strategies. Here you have more than 2 strategies, and this is a lifetime update. I'm working on 2 PDFs that I will be uploading now. We're just coming from the festive season. I'm gonna upload 2 PDFs, and it's a lifetime thing. Okay, you'll have access to this for a lifetime. This is just all the steps outlined in a PDF format, okay, in a way that is also easy to understand in a PDF format. So if you need this is on a playbook. This is the playbook I use every day. This is the playbook that determines my executions, because I already tell you that if you don't know exactly what you're looking for, you are simply gambling. Okay, so you need to know exactly what you're looking for. So here I have different kind of strategies, many strategies. Make sure you find one, and throughout this whole year you focus on one until you really become good at it. That's what's gonna save you, okay? Because I have the one for indices and I have 2 for currencies here. Okay, so just make sure you understand this fully. Okay, so let's go back, guys. Now I'm gonna be a little bit quicker when it comes to this ones here. If you see here on Friday, okay, let's just say on Thursday we had this. Okay, we had this is the high. Actually already you can see that it's denoted by lines. So we had an aggressive day. Okay, so guys, it doesn't matter, we have a super aggressive day. Okay, that's what we need. This is our direction. This fulfills our direction. Okay, this fulfills our direction over here. I told you about the direction. Okay, so we had an aggressive move. Now we're gonna be looking at the previous day's high or low. Is it violated? Okay, if you look here, this is the high that was made on the Wednesday. Okay, this was the high that was made on a Wednesday. So yes, it was violated on this day, firstly by this gap here, but at the end of the day it was violated. So the high was violated and we had the direction. Okay, so we said we need a pullback to a crucial level, and I told you some days will start retesting on the day itself. Okay, they will start actually, okay, let's go back because I want people to understand this pullback to an important key level. Some days I told you that some days it will start on the day itself, or it could start on the day where we are looking for the opportunity, right? Yes. So guys, if you look at this here, the drop started here and it went all the way here, and now I told you that I'll be adding more, or I'll be explaining more when it comes to the key levels. Already you can see we have the high, we have the closing, okay, and we have the low. And again guys, this high can also be a key level sometimes because it's off Wednesday. Yes, it can come and act as a crucial level here. But again guys, if you go to a smaller time frame, because obviously we're going to be executing this on a smaller time frame, okay, on a smaller time frame. If you come to a smaller time frame, a 5 or a 15 min, you realize that now you are able to see other levels very clearly. Okay, we are looking on this day, this is the day of our execution. You'll be able to see that now you see things more clearly. Okay, if you go to 5 minutes, you even see all the important levels, because this is where we got something like support. Okay, because this is an up move, we got support here, and then this is where again they come and use this support. And if you look carefully here, what did we get? We got a W. Okay, we got a W. That's what I was telling you, we need a W I told you on a 5 minute. Okay, this one is happening on a 15 minute. So now we're just gonna come down to a 5 minute. On a 5 minute, you can see we have a W. This is a W, and then it goes up, and then it comes down, and then you can see now it's going up. So this is where I executed. I execute on the B candle that is now leaving, and as you can see, it's now on the closing price, which is important. Okay, so the main idea here is that this one, the moment they break here, they are broken structure because they have been making lower lows. Now they are making a high. When they break here, we call this a break in structure, right? You must understand market structure. Unfortunately, guys, there's a lot of things to understand when it comes to this kind of a business, and sometimes you tend to forget, but there's just a lot of things that have to be going through your mind. Okay, and then you can see they go all the way up. Yes, on this one, yes, they gave a gap, but on other brokers there was no gap. Okay, hence I'm showing these things. Okay, if you look at this one here, it's no longer a break in structure. Now it's a break off structure. Okay, it's a break off structure. And you can see this simply tells you that this move is making higher highs. Okay, and it's going in the direction. So this is where you execute. And the engulfing candle, guys, you already know that this is the most important part for us. Okay, we need an engulfing candle for our execution. And then now you can come and add the 21 moving average. Guys, somebody will ask, what is the moving average? It's 21. You can just take it a little bit back and pause, and you'll see it's 21. Okay, so now this one here bounces on the 21 EMA. And guys, for you to understand the 21 EMA, we have institutions, and institutions are seeing these things. Okay, and when institutions are seeing this thing, remember, institutions use very high volumes. Okay, so for them, the most important thing is the price. Okay, they don't want to get the fill on a bad price. They want to get a fill on a good price. Okay, that's highly important to understand, because the institutions will always want to get fulfilled on a good price. How do they get fulfilled on a good price? They use the EMA. Okay, whenever the prices come and bounces on this EMA, that's when they're gonna enter, because this is by far the best price they can get. Okay, this is by far the best price they can get. Okay, because every time it bounces here, that's why if they want to add, they will add. That's why most of the time you'll find that prices always obey this EMA. Is because institutions are pushing this move. They are actually buying when prices come to this level here. Okay, okay, let me just simplify that. The most important thing is, you know, that institutions like hedge funds, they have hired traders. Okay, and those people get big bonuses. How do they get their bonuses? Their bonuses are based on their performance. Okay, sometimes you must know that, okay, these institutions have economists, and economists will be looking at fundamentals, and they will tell the fund manager that, okay, based on fundamentals, it's saying this move will be going up in time. And then the fund manager will just tell its employees, go and buy. Okay, but if the fund manager said go and buy, and still again these guys are getting bonuses based on their performance. Okay, why are they getting bonuses where else they just did what the fund manager told them to do based on the fundamental information they received from their in-house economist? Okay, they will get bonuses based on the prices where they buy. Hence, they will always want to pay close attention to this EMA. Okay, so that is important for you to understand, and use this 20 moving average, because it is in most cases gonna obey. But again, you must understand basic market structure. So I believe we are done with this one. I'm gonna be quick when it comes to this one. Okay, so you see on this day we had a very aggressive move, and then you can see our opportunity came here for this is actually on UK oil. Okay, for roughly 50. And then again, if you look at US oil, same thing, guys, same thing actually happened. Okay, it was the same setup, aggressive move, go to a 15-minute time frame. It's actually the same thing. Okay, it's actually the same thing. And then you can see this is where we got the support. They actually came to this level over here. If we use the bodies, you will see that's where they actually came and bounced. They gave us our W, and then again, boom, all the way back. So I told you, divide your sizes in two. Okay, divide your sizes in two. The first size, the first position obviously will take on the engulfing here, because if you go to a smaller time frame, you'll see that this is where they pull back. Actually, let's go to a 5-minute time frame, because I want you to understand that this is actually a W with a retest. As you can see, it's a W with a retest, and then we used engulfing candles for our executions. Okay, so I told you, open two positions. If you want to take a lot size of 1, just take 0.5 times 2. Okay, and for 1, take your profit on 60, and then the other one you can hold it till the close. You can see you closed with roughly 80. Okay, so that's the most important thing. And now we'll be going to natural gas. If you look at natural gas again, we had this aggressive move, but here there's something I want to explain to you. You see, we had an aggressive move that qualified on this day. It broke the high, right? Yes, but there's something you have to know. This day, yes, they gave us, and of course one will be expecting it to come back here. But guys, you're not gonna enter blindly, even though you know our directional bias. We're not gonna enter blindly. If you look at structure, you can see this is making lower lows, low. It comes here. It didn't even violate this level over here. Okay, it didn't violate the last high. Okay, it didn't violate it. And if you take it to here, you can see this didn't really violate this area here. And then from here, we were waiting to see if it makes a high. It did not make a high. Instead, it came and made a low. So this one here never broke structure. Okay, there's no break in structure here. If you took this one, yes, it was at an important level somewhere here, but they never broke structure. They kept making lower lows. So I told you, if they keep making lower lows, that means that's another thing. And the moment they now break the low, that means everything here it's invalidated. Okay, so that's why I'm telling you, you need to understand market structure. It's very important for you to understand market structure. Okay, and guys, I did explain everything. If you go to if you go to this this PDFs here, this playbook which is in the description, you will get the strategies on a PDF format. It's just that unfortunately I can't actually share all these things on one video. It's gonna be close to impossible. Okay, and the video will be many hours. I've already received many people telling me that, oh, your videos are too long, your videos are too long. Okay, so guys, that's what I wanted you to understand. Okay, let's go back to 1 hour time frame. Okay, I wanted you to understand that. And now things change. Why? Because now we have an aggressive move to the downside. We have an aggressive move to the downside. Okay, and when we have an aggressive move to the downside like this, again, we're gonna see, okay, do we have direction? Yes. Did they violate the previous day's low or high? In this case, the move is going down. They violated the low of the previous day. Okay, remember, opportunities on this day here. Okay, so we must pay close attention to what they did within these 2 days. Why? Because the high and the low is off this day. Okay, so yes, you can see. And then what did they do? Prices opened and they broke. Yes, some days they will break on the day, but again, their move is still valid because they will retest to key levels. And then now if we go to a 5-minute time, a 15-minute time frame, actually, you will see that, okay, they came back to the most important key level over here. Okay, and guys, it's important for you to be able to distinguish between a break in structure and a stop hunt, because if they break structure, they will spend at least 3 candles. Okay, that can tell you it's a break in structure. But here you can see just pins. They never closed above this level over here. Okay, they never closed above this high over here. So again, this tells you information. They came to this important level. I told you, where there's support or resistance, it becomes a crucial level. So they just came to this level here, and then you pay close attention to structure. On this day itself, they never broke structure, as you can see. Okay, they just kept making higher highs and higher highs. But when you look at the next day, that's when they actually broke structure. As you can see, that's when they broke the structure. And if you took maybe this candle down, your first position takes here, and then I told you, divide your sizes in half, because most of the day they will if you hold to the close, you're gonna get more. Okay, and if you can see, this one actually took at 60 something, which is actually a beautiful move, but the other one took at 450. Okay, so guys, you can see if one took here, because again, you have to get compensated for the fees you're going to be paying. Remember, there are spreads, and the spread is actually the fee that you pay, right? So you need your TP to be hit immediately here, and for one position you need to hold to the close. This one was a little bit weird, but it's something I did actually explain somewhere here, that some days the opportunity won't come on the day itself, they'll come on this day here. But if they come all the way and break the other level on the opposite end, that means the setup is invalidated. For example, had they came this day here and broken the high of this day over here, this would have mean the setup is invalidated. But again, you have to look at the type of breakout. Is it a stop hunt, or is it just a real breakout? If it's a real breakout, it's invalidated. Okay, So I'm glad that on this day they pulled back here, but the opportunity was given the next day. So on this day here, you have to pay close attention to the high. If they come and break the high, really break it, make a higher high, it tells you that this move now is invalidated, okay? But as long as they don't do that, this move is still valid. But also pay close attention to structure, okay? So when we are coming to GJ, okay, the same thing that I was explaining will actually be explained here again. Okay, so guys, when we come to GJ, okay, when we come to GJ, let's look here. We had an aggressive selling day here. Okay, we had an aggressive selling day. Okay, and when we had this aggressive selling day over here, it did actually violate the previous day's low, right? Yes, and as it violated this previous day's low, okay, as it violated this previous day, unfortunately for this one, it came and broke before, okay? But the same rules we have been explaining, then they came back here, okay? The thing is they broke down, okay? Because sometimes guys, they will open, come break, and then go to the opposite end. The most important thing is that that day is still a breakout day, okay? It's still a day that actually came down, okay? So in this case over here, the opportunity can come the next day. As you can see here, the opportunity actually came the following day, okay? It came the following day, and this move just continued down, you see. So this is exactly what I've been sharing with you in the previous example, where they actually give the opportunity, and then of course the pullback to the crucial level is on this day, and then the move collapses on the next day. But that's not important. That's not important, okay? That's highly not important. But again, this happens every time. If you can look at this day here, it happened again. They gave us aggressive move up, they broke this day's level, and then the following day they retested to a crucial level, okay, and they went up again. But I'm not going to be talking about that. I want to talk about something here which is important. You see, we had an aggressive selling day, and then what happened? The following day, what did they do? They gave the pullback that we're looking for, okay, but they were just making higher highs. So on this day there was no selling opportunity. Even if we come to a 5-minute time frame, I want you to understand this, guys. This is making higher highs. So when they make higher highs, you can't tell me that you're gonna sell. Yes, we are expecting it to come down, but we are not gonna sell simply because we are expecting it to go down. We have to look at how it's behaving on the day. And I told you, some days they can do this and the opportunity can come the next day. But tell me, what's wrong about this day here? Obviously, guys, what I've been telling you, this is the high of Friday. They've broken the high of Friday, and this is not a stop hunt. This is a real break. So this changes the dynamics, okay? The entire dynamics have changed here, okay? So this is what I want you to understand. The entire dynamics have changed here. I wouldn't say you have to sell heavily here. Why? Because now they've broken this high. This changes the entire dynamics, okay? And when we look at Ethereum again, I love these moves, guys. You see here, we had an aggressive move to the upside, okay? An aggressive move to the upside, it violates the previous day's high, and then the following day they start retesting. I told you, sometimes the pullback will start on the day itself, okay? On the day itself. When we come to a 15-minute time frame, one thing you'll realize is that, okay, yes, it happened, but again, where does it come to? Okay, let's take the bodies. Okay? If they surpass the key level here, you must use the support and resistance. And on this day, you can see they came and bounced here. And then when they bounce here, now the most important thing is market structure. Are they making lower lows or are they making higher highs? You can see as they were coming, they were making lower lows. And then the dynamics changes here because now they first break structure, okay? Break structure. And then now this is break off structure. And look at the EMA. They are now inside the EMA, okay? So you can see they broke structure over here. Now this is a break in structure and they're bouncing on the EMA. If you need a best fill, you must wait for them to bounce in the EMA and then give you an engulfing candle. So your entry could have been here, okay? And you are taking it back to where? Back to the high. So back to the high on this day was 50, and then again you are holding for more, okay? Because I told you most of the days the close is gonna be way too far, and if you want to take it to the closing of the day, you're gonna get more. So this was 150, but the first one, you need to make sure you're profit is hit. Why? Because you need to get compensated for the fees, okay? Because there are spreads. Every time you open a position, there's spreads, and you're gonna be opening multiple position throughout the year, throughout the month, throughout the week. So you need to get compensated for the losses that you will incur on other ones, and you also need to get compensated for what yes, for the losses and for the spreads, okay? So that's why you must make sure you open two positions. One gets profit here, and the other one you can hold till the closing of the day. Remember, it's still the same size you're taking, you just divided it into half, okay? You can see, okay? So this is how it works, guys. Again, if you look at BTC, again, we have an aggressive selling, okay? Some days it will pull back, some days it will pull back on the day itself, but again, guys, you can see this is where the opportunity is presented the next day. But in cases where the opportunity is presented the next day, you must make sure they don't do what, they don't come and break the low, because if they now break the low, the dynamics changes. But if the low is not broken and they're making higher highs, and they are obeying this EMA, this means your setup is still valid, okay? You just come to a 5-minute time frame, and that's where you actually start looking for, you see, this is where they made the high, and now they broke structure, okay? BIS, breaking structure, and again it's a head and shoulder, okay? Head and shoulder. If you took the head and shoulder, your entry could have been here, okay? And then you put 25 as your stop, okay? But if you're using market structure, obviously now this is a breaking structure, they can bounce on the EMA, and then this is where they actually, now we can say, let's not use the body because I want people to understand this. Now this is a break of structure. So even if you take it here, it's a break of structure again, okay? It's a break of structure, and you're getting the best fall because it just comes from the EMA. And I've explained to you the importance of the EMA. Institutions are actually using the EMA to get the best fall because they are actually using high volumes, and with a high volume, even differences in cents is very important, okay? Why? Because they are buying multiple shares, multiple like a huge volume. This, okay, I'm not gonna say shares because this is not stock, but they are actually using a very, very aggressive volume, so they actually care about the price at which they're getting the fill, okay? So if you want to add, you can see now they're bouncing on the closing price. That's where you can add, okay? So guys, yes, if you take it to the high of the previous day, the TP was hit on the following day, but at the end of the day, as long as they don't violate this low, your move is still valid. So guys, I wanted to show you all that thing, okay? And for those who don't have enough equity, because I know most people don't have capital to actually execute with, if you don't have sufficient capital, guys, that's not a problem, okay? You can come to the Fivers, you can buy a 5K account, $5,000 account. You can buy it with actually $39, okay? So if you have $39, instead of depositing it into your broker, you can use a prop firm. This was established in 2016, and it's one of the best in the industry, okay? And not only because of that, I'll also share something to you, like, okay, maximum loss is 10%. So you see, you have $500 to play with. Instead of playing with $39, you can now play with $500. And then of course, this is a two-step challenge, okay? The first advantage is it's cheap, and then the second advantage is they upscale you, okay? They upscale you. You can start with this one, but the moment you reach 10%, they're going to increase it to 7.5. You reach another 10%, they increase it to 10K. So you can still start with 5K, and you can end up with large amount of capital, and at some point they give you salaries, okay? So this is one of the best prop firm that you can use if you don't have enough capital. I love their scaling part because you can start with the smallest amount. And by the way, I don't encourage people to start with bigger accounts. I know people want big payouts, but still with this one, remember, you are gaining the experience, and you're gaining consistency as well. And if you are still able to end up with, say, maybe somebody with no experience at all bought this account and they failed it, but you bought this one, you can still get to this amount and even surpass it because of their scaling. Every time you reach 10%, they'll increase it. So guys, when it comes to the scaling, even if you withdraw, say maybe you make 5.5, that means you made a profit of $500. You can withdraw this one, but the balance itself will not change, okay? Why? Because they are actually paying close attention to the 10%. So you will take out $500 instead of remaining with $5,000. You still have $5,500 on your balance, okay? Just that you can't withdraw this one because you've already withdrawn it, okay? But the main objective is because they want to help you when it comes to scaling. Okay, so you can use this one. But again, for those who like, okay, this one you'll have to wait like to pass step 1, pass step 2, and then now you're on step 3 again. This is a lot of work. If you think you have enough capital and you are looking for a broker, I recommend Exness. Okay, because this gives you same day withdrawal. Okay, if you can execute during the day and later you withdraw, you'll get your money within, mostly for me it's within 15 minutes. Okay, so this one is same day withdrawal, and that's what matters at the end of the day. Okay, so guys, I have all the links are in the description to these websites. Okay, so if you don't have a capital, you are covered. If you have capital, you are covered. Okay, and if you need the PDF, still again you are covered. Okay, so guys, I really appreciate you. Okay, make sure, even if you have these 2 PDFs, make sure you master one strategy. When you are good at it, that's when you can move to the next one, so you can use these other strategies as a long-term plan. Don't try to master everything during 1 year. Take time, one strategy per year. That's what's gonna work for you. Okay, by the time you go to the second strategy, you must make sure you are consistent already with one strategy. Okay, that's what actually helps. So guys, I really appreciate you. Have a blessed